Tattooed Chef has recently had its ups and downs. After releasing negative earnings, it skyrocketed 15%, which is very, very odd. At the same time, Tattooed Chef seems like it's been on the slow downtrend for a while. So in this video, we're going to be talking about why Tattooed Chef reacted this way to its earnings and what I think the next couple years for this stock could potentially look like. Let's get it. So one of the most important things to consider first is that Tattooed Chef had its earnings date postponed and rescheduled to a later date. The reason this is important is because we can see that there was a lot of bleeding happening for Tattooed Chef up until the earnings release. People, and especially short-term investors, were selling out of fear that there would be negative earnings. And delaying the earnings just caused a little bit more fear and angst in the investors, which definitely caused more people to sell out. On top of delaying earnings, people were also nervous because Beyond Meat got destroyed after the earnings report, and people were nervous that the same would happen for Tattooed Chef. Also, Tattooed Chef was recently downtrending before they announced that they're postponing the earnings, so this was basically a time where people weren't the most confident in this stock, so they were selling out. Tattooed Chef missed on EPS and revenue expectations. They showed a loss of 10 cents per share when their expectations was a loss of 6 cents per share. They also had a revenue of $58 million, which was a miss by 8%. So the crazy thing is, they missed twice on earnings, but this stock still shot up 15% after they released it. And the main reason for that is that all the skeptics sold out of the stock before the earnings report, so the stock didn't really have much more ground to fall. After the negative earnings, there were a lot of long-term investors that saw a good deal on Tattooed Chef, and they really understood the long-term vision of this stock, so they bought in. With an earnings miss like Tattooed Chef had, you would expect a lot of stocks to have a deep red day and for the short sellers to be happy, but that was not a good day for short sellers after the earnings. Quite frankly, the truth with some of these new companies is it's okay for them to miss earnings several times, especially because they're so new. Nobody even knew what Tattooed Chef was 2 years ago. This company has years and years of growth ahead of it, making it so that it's almost irrelevant what they hit on their earnings right now. The thing that matters the most right now is that Tattooed Chef is innovating with new lines of food and products they bring out so that they can stay ahead of the curve and ahead of the competitors especially. I want to show you a chart of Celsius Holdings. You can see that between Q3 and Q4 of 2017, Celsius's revenue shrunk. They were also really struggling to grow between Q3 of 2018 and Q1 of 2019. And then from Q1 of 2019 to present, Celsius had consistent high growth. And this company is still pretty new. Most companies struggle on early years and later they get consistent hyper growth. This is definitely the vision that I have for Tattooed Chef. They may be a little shaky on the earnings right now, but they have a good management team and they're consistently launching new product lines. So for me, as long as the management team keeps their head on straight, Tattooed Chef will be looking pretty good in the long run. Add me on TikTok and Instagram at Krishna Thiru Show and subscribe or don't, I don't know. Peace.